Have you ever wondered how a single entity's downfall could shake the entire world's economy? Let's turn back the clock a bit, to the year 2008. It was a year that will forever be etched in the annals of economic history. The world was in the throes of a financial crisis, the likes of which hadn't been seen since the Great Depression. Global markets were in turmoil, with stock prices plummeting and investors panicking. Now picture this, a single financial institution at the heart of it all. This wasn't just any bank, this was Lehman Brothers, a titan in the world of finance. Founded in the mid-19th century, it had weathered storms and crises for over a century and a half. Yet it was this very institution that would become the catalyst for a global catastrophe. But how did this happen? How did one of the oldest and most respected banks in the world become the trigger for a worldwide economic downturn? That is the question we intend to unravel. Lehman Brothers was more than just a bank. It was a symbol of power and stability. It was a fortress in the world of finance, seemingly impervious to the volatility of the markets. It was considered too big to fail. Yet in 2008, it did just that. It failed. And its failure sent shockwaves around the globe. This wasn't just a corporate bankruptcy. This was a catastrophe of unseen proportions. It led to widespread job losses, foreclosures, and economic downturns. It served as a harsh reminder of the interconnectedness of global finance and the domino effect that can occur when one piece falls. It all started with Lehman Brothers, a bank that was once perceived as indestructible. The story of its rise and fall is a cautionary tale, a stark warning of the dangers of unchecked ambition and reckless financial practices. As we delve into this story, remember, every rise has a fall, and every fall has its consequences. But every story has a beginning, and Lehman Brothers is no exception. Our tale starts in the mid-19th century, with the arrival of three brothers on American soil. Henry, Emanuel, and Mayer Lehman, German Jewish immigrants, set foot on a new land, carrying with them dreams of prosperity and success. This was the dawn of a new era. The year was 1850. The brothers chose the southern state of Alabama as their new home. Here they founded a small general store, a modest enterprise that would later grow into an industry titan. This was the birthplace of Lehman Brothers, a name that would go on to resonate in the hallways of Wall Street. Initially, the brothers embarked on a journey into the world of commodities trading. Cotton, a cash crop of the South, was their primary focus. As the business grew, so did their ambitions. The Lehman Brothers gradually expanded their operations, moving away from the cotton fields of Alabama to the bustling streets of New York City. By the turn of the century, Lehman Brothers had shifted its focus to a more lucrative venture. They ventured into the realm of investment banking, a move that would lay the foundation for their future success. The brothers demonstrated a knack for identifying profitable investments, soon establishing themselves as reputable players in the financial world. The company's success was a testament to the brothers' acumen, resilience, and foresight. They had transformed a humble general store into a formidable financial institution, navigating the unpredictable tides of the economy with unwavering determination. Their journey was a shining example of the American dream, a narrative of rags to riches that inspired countless others. Lehman Brothers had come a long way from its humble beginnings. The company's meteoric rise was a testament to the power of ambition and hard work. It was a symbol of American success, a beacon of hope for those who dared to dream. From a humble Alabama general store to a Wall Street giant, Lehman Brothers was a symbol of American success. Lehman Brothers didn't just grow, it skyrocketed to the top. As we delve into the 20th century, Lehman Brothers was not just a participant, but a pace-setter in the financial world. It was a period marked by growth so exponential, it was akin to a rocket shooting straight into the stratosphere. The firm's ascension was marked by several key events. One such event was the Great Depression. While it was a time of economic hardship for many, Lehman Brothers saw an opportunity. They diversified their investments, pouring resources into sectors that were still thriving, such as retail and entertainment. This strategic move not only saved them from the economic downturn, but also set them on a path to becoming a major player in the investment banking world. As the decades rolled on, Lehman Brothers continued to make strategic moves that would cement their position at the top. In the 1950s, they were instrumental in the creation of the first television IPO, forever changing the landscape of the entertainment industry. This was followed by another groundbreaking move in the 1970s when they launched the first computer IPO. This not only revolutionized the tech industry but also positioned Lehman Brothers as a leader in the finance sector. With each passing decade, Lehman Brothers continued to innovate, delve into new sectors, and shape the financial landscape. They not only adapted to the changing times but also anticipated them. Their foresight allowed them to seize opportunities and grow their empire. They were not just surviving, they were thriving. By the 1990s, Lehman Brothers was not just a Wall Street firm, it was a global force to be reckoned with. They had offices in major cities across the globe, from London to Tokyo. They were not just participating in the global financial scene, they were shaping it. By the turn of the century, Lehman Brothers was a financial powerhouse. Their story is a testament to the power of strategic moves, foresight, and the ability to adapt to changing times. From humble beginnings to a global empire, Lehman Brothers' rise to power was nothing short of remarkable. But as quickly as Lehman Brothers rose, it fell even faster. The swift ascent to power was met with an equally rapid descent into oblivion, a testament to the precarious nature of unchecked ambition and reckless pursuit of wealth. Lehman Brothers, once a beacon of financial prosperity, had become a playground for risky investments and unethical business practices. The bank's insatiable appetite for high-stakes gambles and quick profits led to an aggressive pursuit of subprime mortgages. These were loans given to borrowers with low creditworthiness, a ticking time bomb waiting to explode. In the early 2000s, the housing market was booming, and Lehman Brothers was at the forefront, raking in enormous profits. But what seemed like a gold mine was a house of cards built on shaky foundations. The bank was heavily leveraged, with debts far exceeding its assets. This over-reliance on borrowed money made it extremely vulnerable to market fluctuations. As the housing market began to cool down, the subprime mortgage bubble started to burst. The loans that had been so profitable were now worth less than the bank had paid for them. This led to massive losses, and the bank found itself in a financial quagmire. In addition to these risky investments, Lehman Brothers was also embroiled in a series of unethical business practices. The bank was accused of using accounting loopholes to hide its massive debts, a deceptive tactic that artificially inflated its profits and masked the true state of its financial health. As the losses mounted, faith in Lehman Brothers began to wane. Investors started pulling out, creating a liquidity crisis. In September 2008, the bank filed for bankruptcy, the largest in history, with a staggering debt of $613 billion. The once mighty Lehman Brothers, a titan that had stood tall for over a century and a half, had crumbled. Its fall was a chilling reminder of the destructive power of unchecked greed and reckless risk-taking. In an instant, the titan of Wall Street was no more. The collapse of Lehman Brothers was not just a company's end, it was the beginning of a global crisis. A seismic shockwave that reverberated around the world, shaking the very foundations of economies near and far. The fallout was as swift as it was devastating. In the wake of Lehman Brothers' demise, the world plummeted into a global financial crisis, the likes of which hadn't been seen since the Great Depression. Markets tumbled, banks fell, and the world's economy stuttered and stalled. The financial landscape was irrevocably altered, and the pillars of Wall Street were left teetering on the brink of collapse. But the impact extended far beyond the world of high finance. Millions of everyday people, many of whom had never heard of Lehman Brothers before, found their lives upended. Jobs disappeared as industries contracted and businesses shuttered. Unemployment rates soared, reaching levels that hadn't been seen in decades. Families faced foreclosures, unable to keep up with their mortgage payments, and the dream of homeownership became a nightmare for many. The economic downturn that followed was not short-lived. It was a long, grueling recession that took years to recover from. Widespread austerity measures were implemented as governments grappled with mounting debt and shrinking revenues. The social fabric was strained as people struggled to make ends meet, and the gap between the rich and the poor grew wider. In the end, the collapse of Lehman Brothers served as a harsh wake-up call. It exposed the flaws of a system that had become too complacent, too entangled in its own complexity. It highlighted the need for better oversight, stricter regulations, and a more responsible approach to financial management. It underscored the importance of transparency, accountability, and risk management. Lehman Brothers serves as a stark reminder of the potential consequences of unchecked ambition and reckless decision-making. It is a cautionary tale that continues to resonate, a lesson that must never be forgotten. Because the cost of forgetting, as we've seen, is far too high.